Palantir just dropped a massive announcement today. People are excited. This clears the air of fear and uncertainty lately. However, something bigger just got leaked by the CEO, and it's going to affect Palantir big time. Multi-trillion-dollar opportunity is here. This might be your last chance. But what on earth am I even talking about? Well, let me explain. Disclaimer. Big news just dropped about Palantir today. But let's start with the very beginning. Today, they've made a bold move by hiring Miller Strategies, a top-tier lobbying firm, to help with defense policy and appropriations. This is a serious play, and it says a lot about where the company's focus is right now. Here's some context. Since 2009, Palantir has raked in nearly $2.5 billion in contracts from the US government. That's impressive, but what's even crazier is that more than half of that, about $1.3 billion, came straight from the Department of Defense. And they're not slowing down. In fact, they've been steadily locking in bigger and bigger deals each year, hitting a record $531 million in fiscal year 2024. Now, with moves like this, it's clear Palantir isn't just resting on its reputation. They're going all in to strengthen their relationship with the government, especially in defense. At a time when global security is a hot topic, this could position Palantir as an even bigger player in shaping policy and securing major contracts. It's fascinating to watch how they're pushing their influence and cementing their role in the tech defense space. And this announcement couldn't have come at a better time. Palantir's stock has been on a rough ride lately, crashing for days. The atmosphere around it has been pretty grim, with people panicking and selling off their positions left and right. It's been a tough scene for anyone invested in the company. But this kind of announcement? It's like a lifeline. It's a big deal that injects hope and sparks excitement, even in the middle of all the market chaos. It's a reminder that Palantir is still making bold moves and securing its place in one of the most lucrative sectors, defense. For those who've been feeling down about the recent price drops, this is the kind of news that makes them think twice about jumping ship. It's a signal that the company is still playing the long game, and there's a lot more ahead. But here's the thing. This announcement might just be the tip of the iceberg. Sure, there's a ton of speculation out there saying Palantir might never recover. The doubters are loud right now. But let me tell you something that could completely shift the narrative. Just today, Nvidia's CEO Jensen Huang dropped multiple bombshells, and they're massive. At the CES 2025 conference, Huang stood on that stage and made it clear. We're entering the age of AI agentics. He called it a multi-trillion-dollar opportunity and said it's about to redefine how people work and innovate. Huang didn't just stop there. He used his keynote to explain how agentic AI is the next evolution of AI, a leap beyond generative AI. This is about smart, adaptable AI agents that can assist across industries, from finance to logistics to public safety. It's not just hype. Huang painted a future where this sector will dominate, describing it as a multi-trillion-dollar opportunity. So what does all this mean for Palantir and its investors? Well, this could be huge. Palantir has already cemented itself as a leader in integrating advanced analytics, AI, and machine learning into real-world solutions. They're not just dabbling in AI, they're building platforms that could power this exact kind of future. If Huang is right, and AI agents become the backbone of industries, Palantir is perfectly positioned to ride that wave. Their platforms are tailor-made for the kind of advanced AI deployments Huang is talking about. For investors, this is a glimmer of light in what felt like a pretty dark time. It's a reminder that the real potential of Palantir might still be unfolding. And we're just starting to see how big it could get. And here's where it gets even more interesting. Palantir isn't just positioned to benefit from this shift. It could very well be one of the main platforms powering it. Think about it. If AI agents and robotics are going to transform industries, they'll need the kind of advanced analytics and data-driven infrastructure Palantir excels at. One Twitter user even pointed this out in a quick but powerful tweet, saying that Palantir will likely be one of the core platforms used to train AI and robots for these next-generation applications. It makes sense, right? Palantir's software is already being used to integrate complex systems, analyze massive datasets, and enable intelligent decision-making. It's the kind of foundation that's tailor-made for this AI-driven future. But it doesn't end there. Here's another bombshell from Jensen Huang. Today, he didn't just talk about AI. He also dropped a statement that's sending shockwaves through the tech world. He said quantum computing is still 20 years away from being useful. The impact was immediate. Dwave Quantum, a company heavily focused on quantum tech, saw its stock nosedive, dropping as much as 49% before ending the day down 36%. And let's not forget, this stock has been on an insane run, up 1,000% since September. But Huang's comments clearly rattled investors. Now you might think, what's the impact of this when it comes to Palantir? Well, let me tell you a lot, actually. If quantum computing is really decades away, it means the industries Palantir serves will remain focused on solutions grounded in today's technology. Things like advanced analytics, AI, and machine learning. And guess who's already leading the charge in those areas? This could give Palantir more time to dominate the space and solidify its role as a go-to platform for cutting-edge AI. While quantum computing will eventually be a game-changer, Jensen's comments suggest that it's not an immediate threat to companies like Palantir. Instead, it puts a spotlight on the here and now, where Palantir thrives by delivering practical, scalable solutions for today's biggest challenges. Here's the crazy part. Because of Jensen Huang's comments on quantum computing, the conversation has taken a sharp turn. Investors are now questioning whether pouring money into quantum computing is the best move. Many are starting to believe that AI stocks like Palantir are the smarter choice right now. One Twitter analyst really nailed it with a tweet that sums it up perfectly. He said, "You could invest in quantum computing, or alternatively, you could invest in Palantir." What he's getting at is simple but powerful. While quantum computing is still years away from being practical, AI is here and now. Palantir is already at the forefront of AI and advanced analytics, and it's making major strides in industries where AI is already driving change. With all the hype around AI right now, and with Palantir's strategic positioning in that space, this tweet makes a lot of sense. Palantir is offering tangible, real-world solutions today, while quantum computing is still in the distant future. The company's already built the infrastructure to support the next generation of AI-driven innovation, and it's showing no signs of slowing down. It's a reminder that sometimes focusing on what's already working can be the best move. To really back up the idea that AI is about to make a huge impact on industries, let's look at what Palantir's CTO said in a recent interview. He explained that the true value of AI lies in automation and in achieving enterprise autonomy. He put it perfectly when he said, "Maybe you can be 50% more productive with a co-pilot, but unlocking all of the economic value requires thinking about AI as a type of labor." What he's saying is that AI isn't just about being an assistant that helps you get things done quicker. It's about fundamentally changing how work is done, to the point where AI can take on real, value-creating tasks across entire organizations. This type of automation doesn't just make things more efficient. It transforms the way industries operate, unlocking massive economic potential. Palantir has positioned itself as a powerful platform that can support the kind of enterprise autonomy the CTO was talking about. The tools they're building aren't just about improving productivity. They're about creating entire systems that can make complex decisions, automate processes, and drive value at a scale that wasn't possible before. For investors, this just adds another layer of confidence in Palantir's future. As industries move towards more automation and AI-driven decision-making, Palantir is in the perfect position to lead the way. The company isn't just following trends. It's actively shaping the future of AI and enterprise solutions. When you take everything into consideration, the bold moves Palantir is making, the growing potential of AI, and the way the company is positioned in the market, it's starting to look like the recent price crash might just be a little bump in the road. Sure, it feels tough in the short term, but long term, the future looks much brighter. One user on Twitter put it perfectly in a tweet, saying that the best thing we can do right now is to hold our Palantir. It's a reminder that, while the market can be volatile, and the immediate future might seem uncertain, the company's strategic moves in the booming AI sector make it a smart play for those willing to ride out the ups and downs. In the grand scheme of things, this dip might be nothing more than a temporary setback in what could be a much bigger journey ahead for Palantir. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.
Got out of control. We thought the situation with Shiba Inu is pretty dry these days. Oh God, we were wrong. Analysts just checked the on-chain data and they left with nothing to do. But to ring the alarm, situation is clearly very, very unexpected. But what is actually happening? Well, let me explain. Disclaimer. Today is a very exciting day in the world of Shiba Inu. In an unexpected turn of events, a mysterious investor has made headlines by cashing out with an incredible $3.2 million profit. This translates to an impressive 200% return on their investment over 2.6 years. This investor first entered the Shiba Inu market in October 2021. They bought a massive 199 billion Shiba Inu tokens, spending about $1.68 million on both Coinbase and various decentralized exchanges. Even though they faced an initial loss of $176,000, the investor stayed committed, believing in the potential of Shiba Inu. When Shiba Inu was introduced in 2021, it saw a huge increase in value during the bull market. However, the price later dropped significantly following the broader market trends. Despite the ups and downs, this investor held onto their Shiba Inu tokens, showing a strong belief in their investment strategy. And as we all remember, recently, the price of Shiba Inu has surged by 165%, and this is where things got interesting. The investor made a smart move to take advantage of this increase. After enduring the notorious fluctuations of the crypto market, the investor decided to cash out. They moved their Shiba Inu tokens, now valued at $4.88 million, back into Coinbase. This move resulted in a substantial $3.2 million profit, marking an impressive 191% return on their investment. This is a classic example of someone who invested early in a project and held onto their tokens despite many challenges. Their patience and belief in the long-term future of Shiba Inu has been a key factor in Shiba Inu's growth. The investor has already said that this is a positive sign of the long-term potential of their investment have truly paid off. And this sudden whale movement made analysts wonder what's the current situation with whales and Shiba Inu. Are there any behind-the-scenes moves that we should know? And well, surprisingly, this was a very smart thought, as the situation with the whales is currently going crazy. The dog-themed cryptocurrency has just experienced a massive 1,590% surge in large holder inflows, thanks to significant activity from whales. According to the data from Intot the Block, the metric called large holders inflow, which tracks the funds moving into addresses held by whales or large investors, has skyrocketed by 1590% in the past 24 hours. Specifically, the inflows jumped from 728 billion Shiba Inu on May 15 to almost 4 trillion Shiba Inu on May 16. This spike in large holder inflows typically points to two key possibilities. First, it often suggests that significant buying activity is occurring. Many whale addresses tend to purchase on centralized exchanges and then move their acquisitions to cold storage. Second, such surges can indicate that prices might be at a bottom. Whale addresses usually prefer to buy in bulk, following substantial price corrections. Both scenarios seem plausible, as Shiba Inu's price contends with crucial resistance levels. And that is very important, since Shiba Inu sharks and whale addresses have been steadily increasing their holdings, accumulating over 4.35 trillion Shiba Inu since the beginning. According to another on-chain data from crypto behavior analytics resource Santiment, the balances of addresses holding between 100,000 and 1 million Shiba Inu, as well as those holding at least 1 billion tokens, have significantly increased since the previous uptrend began in late February. Recall that Shiba Inu started its meteoric rise during the meme coin craze on February 26, when its price surged to surprising heights. Shiba Inu maintained this rally until March 5, reaching a 27-month high of 1.5 trillion Shiba Inu. The price of Shiba Inu shares rose to $1.50 trillion, marking an impressive 373% increase. The ongoing accumulation pattern from Shiba Inu sharks, those holding between 100,000 and 1 million Shiba Inu, was already in motion when the uptrend began. This group of addresses started gathering tokens from June 2023, when Shiba Inu's price significantly dropped. These wallets took advantage of the dip, continuing their purchases into the new year. The buying campaign gained even more momentum when Shiba Inu experienced its price drop and the price upswing in late February. Since March 1, these addresses have bought an additional 10 billion tokens, now collectively holding over 100 billion Shiba Inu. Meanwhile, the whale addresses holding at least 1 billion Shiba Inu didn't take advantage of the downturn throughout last year. However, these wallets began their accumulation campaign in late February,